So what does a commercial insurance agent do? Might be helpful to understand what are the roles and requirements of a commercial insurance agent. So if you're a client or a prospective client, you're aware of what they provide to you as a resource, what they contribute to your business, and what their role is in helping you offset risk or understand risk. A commercial insurance agent, sometimes referred to as a producer, is a person within an agency or maybe the agency owner that helps a business client obtain insurance policies to cover prospective risks for their business. Some of these policies are required under law, like work comp insurance. Some professional liability policies are required, E&O policies. Sometimes surety bonds are required. And the agent will help place that coverage with what's called a market. So there may be different insurance companies that provide policies that cover your specific need, and the agent will look at those different markets to see which one is most appealing to you as a customer, and maybe even guide you towards ones that might be more appropriate for you. It's not always going to be about the price or the cost, because you want to make sure you have the right coverage first. Once you have the right coverages, then you're going to look to see which ones are most cost effective. Part of what goes into determining that cost are things like the deductibles or the risk sharing. Your insurance agent or producer does, in their internal job, business development. They're going to look for new clients. They're going to look for ways to find new customers to sell them insurance. Although it's not really so much of a sales job like, high pressure sales are trying to close deals. It's more about creating relationships with businesses that already need coverage. And it may also be networking with existing customers to find other businesses like theirs. As an example, if an insurance agent has a lot of customers that are, let's say, in the dry cleaning business because they understand that market, they understand what goes in behind the scenes, they might connect with their existing customers and ask them, look, do you have other people in your network? Do you have an industry trade group? Because, as you know, I've been able to provide coverage for you in your business, and I'd like to help out others as well. Maybe that insurance agent, in the course of their day, now has to do things with helping underwriting, meaning that if you have a client as an insurance producer that is now looking to place coverage or looking to expand coverage, maybe adding a new policy, the insurance company that's going to underwrite that policy or that's going to place that policy will have certain requirements from the customer, and the agent will help you as a customer put together that documentation. It might be what's called loss runs, meaning that you have to give them printouts or outlines of any losses and claims payments you've had going back a certain period of time. Maybe they need 3 years of loss runs or 5 years of loss runs in order to get them to understand what the risk is to their insurance company to cover you. If you have a lot of losses, the risk is going to be higher, and you might have to place it with a different company. Or if the risk is lower, there might be more markets to choose from with a lower cost. The other thing that the agent will do as part of their job every day is to look at existing customers to anticipate renewal dates or X dates. If you have a client that maybe has a policy coming up for renewal in 2 months, you might want to start early looking at what markets are available for that client. Because on the one hand, you might just renew the existing policy, but as an insurance agent, if you look to see if there's any new markets available for that client, or maybe look to see if the existing company has a different type of policy. There are standard policies within commercial lines. A BOP policy is a business owner's policy, or a CPP is a commercial package policy. There's commercial auto policies that are standardized. But as an agent, if you're looking to see what the coverages are currently in place for your insured and reviewing other options. Is there a better way to place that same coverage? In addition, it's also a good idea to talk to existing customers about their current coverage and their risk to see if they still match up. Maybe when the policy was written 2 or 3 years ago, the risk for that company was at a certain level because they had 8 employees and 2 cars on the road and $2 million in revenue. But what happens in the last year if maybe they've acquired a new location, now they have 32 employees, they have 4 commercial autos, and they have a new line of business that maybe has a different risk. Maybe before they were in the media business selling advertising, but now they bought a publisher, so now they're actually printing materials that have ink and other chemicals that maybe it's a higher risk. Understanding what might be different with the insured is important to make sure that you don't just rubber stamp the old policy and send them on their way. You want to make sure you understand that. And a good commercial lines producer or agent will have those conversations with the insured throughout the year, especially a month or 2 or 3 before renewal, so they can be sure that the coverage that's placed for that customer is appropriate for the risk for the next year, not what the coverage was for 2 years ago, because it might be different. In addition, there might be new lines of coverage to add on. For example, it might be appropriate to add on cyber liability insurance. That's a type of coverage that probably wasn't even considered by many insureds, many clients 2 or 3 years ago, because the risk wasn't that high. But in 2022, now cyber liability insurance might be a very high profile type of coverage, and a lot of clients might want it. So adding that line as a separate policy, maybe an endorsement on an existing policy, maybe even looking to see if it's included with your current policy, could be part of that annual review of the account. You have to be careful as an insurance producer to call yourself a risk manager. And a lot of insurance companies represent or use the term risk manager. Well, that kind of implies that you're helping the client manage their risk. In most cases, the insurance agent is really not managing the risk, they're covering the risk. They're helping offset the risk. Managing the risk kind of implies helping the company reduce the risk within their firm. You might give some suggestions to the firm for doing that, but unless you're really involved on a full-time basis of managing the risk and help reducing it on a daily basis, risk manager is a little bit of a stretch in most cases. What else does an insurance commercial lines agent or producer do throughout the day? They're probably going to converse with the various techs in their company, within their agency, to learn about new markets. Maybe one of their insurers, one of the major carriers, might have come out with a new product that might be advantageous to existing clients or even new clients. Maybe there's a new line of business that's becoming available through one of their markets that they're assigned with, that you could look for new customers in that industry. Maybe in the past you avoided the trucking industry because you really didn't have good policies available for the trucking industry. But if one of your providers has now come out with a new line of coverage for the trucking industry, maybe now you can go back and talk to some of those potential clients that in the past who needed that coverage that you didn't have the availability to offer. A lot of times that information will come from the other representatives in your agency or from the representatives from your insurance carriers. Insurance carriers come up with new products and services all the time, and as a broker you need to know about those. In addition, there's a section of business referred to as excess and surplus lines. And excess and surplus lines is an area of business that is more customizable for clients. And where this comes in is, let's say if you are a major insurance carrier, let's just pick one out of the thin air, call it like Chubb. And Chubb may have specific policies like business owner policies, commercial auto policies that are registered with the state. They're admitted carriers with the state. Their policies are established and conferred with the licensing board for customers. But what if there's a certain type of risk, a certain type of policy that no insurance company has really come up with yet and registered with the state licensing board? There are alternate policies that are referred to as excess and surplus lines or non-admitted carriers that if you as an insurance agent have looked through all the admitted carriers and all the registered policies in that state, and there's nothing that meets the needs of what your customer needs to have, you can then go to a surplus lines policy and sell that policy to your client. You can't sell a surplus lines policy unless you've done some reasonably good faith efforts to find appropriate policy that's already established in your state. But there are many, many types of risk that major insurance companies have not yet come up with a registered policy for in every particular state. It's important as a potential client to know when an excess and surplus lines policy is appropriate. The policies are a little more customizable. They're a little more tailored to your needs. Usually are a little more expensive. There's also usually taxes on top of them. You normally don't pay sales tax on insurance policies. A surplus lines policy probably has tax. In addition, your agent has to be licensed as a surplus lines agent. Not every agent can sell surplus lines. There may be one agent in a particular insurance company that's allowed to do surplus lines. So you might be wondering, well, why is my agent not handling this policy for me? It could be because it's a surplus lines policy and they're not licensed for that. What else does an insurance agent in the commercial lines industry do throughout the day? Well, they're also going to be looking at what is going on in the general economy of their market area. If they're seeing that in their geographic area, they may cover a city, an MSA, a whole state, or even a region. If they see that employment is increasing, if they see that companies are growing, payrolls are increasing, it might be a time to look at options for better work comp insurance policies that you can offer, because you know that your customers that you currently have, and even ones that are just going to call you out of the blue tomorrow, are going to need more coverage for work comp. Maybe it's looking at if businesses are increasing umbrella policies. Commercial umbrella is a way to add additional coverage over your entire group of policies to get higher limits on the existing coverage. Maybe it's time to kind of dust off the manuals on umbrella policies, commercial umbrella policies. Maybe if you see in your area there's certain businesses that are contracting or moving out of the area. Maybe it used to be a farming area and a lot of the farms are shutting down. It might be time to look at what are different uses of properties that are going to be coming online in the future. Maybe a lot of the farms are being converted into commercial property, industrial property. One area of the economy that's growing is warehouse space. For online e-commerce, a lot of companies like Amazon and Walmart, they're creating warehouse space, and a lot of those warehouse spaces need accessory companies to serve them. Local transport companies, even construction companies, restaurants, all the things that go around new development. If you're anticipating that as a commercial lines broker, you'll be better served to handle those new customers when they come. More importantly, if you have that industry knowledge, when you're talking to your existing customers that are in other industries, you might let them know that not only do their business opportunities might change in the future, their coverage needs might change, because if, for example, they're in an area that will have new high traffic for commercial trucks in front of their business, they might have business opportunities, but they also might have additional risks. Maybe a rock comes flying off the truck. Maybe they might be at more risk of having one of their vehicles hit by one of these trucks. Or maybe if the trucks are parking on the street, they can't park on the street and they need, to park off site. So there's a lot of details to know about your business market that will help you with your clients and also to develop your business. And then the last thing you do throughout the day is looking at your current book of business and how it's balanced. You want to always be improving your book of business, which is the collection of all your customers and your clients. And you want to make sure that it's a good balance so that it's not, your eggs aren't all in one basket, but that you have expertise in the areas where you're working. In addition, you want to look at, do the accounts need to be rounded out? Do the majority of your accounts have full coverage in areas like commercial umbrella? Maybe that's an area that only 10% of your accounts have, but really most clients should have that, and you can talk to your clients about that. On top of that, you can look at loss runs. Do one segment of your accounts have more losses and claims than the rest of your book? And if you see that one area, maybe 10% of your accounts by census have 80% of your losses and claims, you can look at what is common to those. Are they all in the same geographic area? Are they all in the same business? Are they all of the same size company? And by understanding that loss distribution, it might help you work with your insurers to suggest loss reduction for those companies. It might help you select new clients that are either in other areas so you don't have the losses, or if you're engaging with clients that would be of that same demographic of potential higher loss, is looking at what the risks are and advising how to reduce those risks. That's where you can do some risk management appropriately. You may want to get good legal advice before you start throwing around risk management as a title for yourself. But that's kind of an example of the day in the life of a commercial lines agent or producer. And if you're a client of a commercial lines producer, even though you may only talk to that person once, twice, 3 times a year, it's important to know what their role is and what they're doing for you, not just a place you send your payment for your commercial policy. Having the knowledge of what capabilities they have. Many times the reason that a commercial lines agent doesn't do as much for a client as they could is because the client sometimes is not receptive to the offerings. And it may just be time. We all have our full days, our calendars are filled up. But if you take the time to have a conversation with a commercial lines agent, even if it's not your agent, that can help establish the right kind of coverages, can save you some money, and it will prevent a problem if you have a claim later that you find out wasn't covered because the agent didn't understand what your risks were and what your actual exposure was to different risks. Commercial lines insurance is very different from just buying a car insurance policy from the Lizard or from the Emu. It's more important to have it carefully match your business because every business is different. And a good commercial lines producer or insurance agent will help understand that if you give them the time to do it. Look at it as a resource. Almost look at it like they're an employee of yours that helps you get something done that you want to get done.